Tonight I'm going to deal with three topics: the banking union, the preparation of the annual meeting of the European Stability Mechanism, and third and last, I will say a few words on the perceptions I get from the spring meeting at the IMF. Now, on the banking union update, the Single Resolution Board and the Single Supervision Mechanism gave a very timely and comprehensive update of the situation. The ESM clearly concurs with the statement that financial stability is a prerequisite for a resilient and competitive economy. As pointed out by the SSM, heightened geopolitical tensions pose significant risks to the banking sector, namely in areas of credit, liquidity, funding, and cyber. We need to deepen our understanding of these risks and build on the decade of financial stability Europe has enjoyed. In a recent blog I wrote with the chair of the European Banking Authority, José Manuel Campa, we look into these challenges and flag their financial stability implications. The ESM also fully shares the Single Resolution Board's call for the urgent operationalization of the common backstop to the Single Resolution Fund to be provided by the ESM. And we know this is a difficult one. Banking union is at a disadvantage compared to other jurisdictions because of the lack of a common backstop, because it weakens the attractiveness of European banks and affects foreign investors' views on operations in the euro area. So completing the banking union is also important because it contributes to the objectives of the savings and investment union. On the preparation of the Board of Governors and annual meeting in June, I would like to say that it was a very timely moment to take stock of where we stand on ESM-related matters in preparation of that event. The ESM is happy to welcome its shareholders, the finance ministers of the euro area, and observers from EU institutions to Luxembourg in June. Today's discussion was a good start to exchange on how to make best use of the ESM in view of the current and future challenges. My main message was that the ESM remains hopeful that the amended ESM treaty will be fully ratified, which would allow the ESM reform to become effective. In the meanwhile, there is a lot that the institution can do to support its member states and the euro area within the existing framework. We will use the following weeks to liaise with the countries to best prepare for this annual meeting. Lastly, short debrief on the IMF spring meetings. The shifting international order, increased geoeconomic fragmentation, and uncertain global outlook has renewed the interest of regional crisis fighters like the ESM and the cooperation between the IMF and these regional crisis mechanisms. This was also stressed by Kristalina Georgieva, the IMF Managing Director. The IMF will soon start an assessment of the global financial safety net, including the role of regional financial arrangements and their ability to safeguard global financial stability. The ESM is an important partner of the fund in this important endeavor because we have since 10 years played the role of coordinator amongst all these regional financial arrangements. On the macroeconomic side, I heard in Washington concerns of persistent damage emerging from the policy course of the US administration. Markets are closely watching the role of the US dollar and US securities as safe havens. In this environment, Europe is seen as a relatively more attractive and reliable partner with more stability policy framework with rule of law and a believer in a rules-based trade framework. Europe must seize this opportunity that was also said to us by many players in the market. And the best way to seize that opportunity is by doing our homework, and that is to implement the banking union and more generally the savings and investment union.